Hello, my name is William Cruz, and welcome to my financial analysis of Spotify for Accounting 2301. Who is Spotify and what do they do? Spotify is an audio streaming service founded in Sweden in 2008. Currently, Spotify users can stream over 80 million different music and audio tracks, 4.7 million podcasts, and now you can also stream audiobooks. Presently, Spotify has almost 460 million users, almost 200 million of which are paying subscribers. With an impressive library and number of users, it should come as no surprise that Spotify currently operates in 183 different global markets with offices and subsidiary companies in 14 different countries and offers content in over 60 different languages. According to Spotify's website, their mission is to unlock the potential of human creativity by giving a million creative artists the opportunity to live off their art and billions of fans the opportunity to enjoy and be inspired by it. Spotify has been very busy over the first 3 quarters of the fiscal year of 2022. In those 3 quarters, they have purchased 3 different tech companies. First was Synatic Limited, an artificial intelligence company that specializes in text-to-speech technology. Second was Findway World LLC, a digital audiobook streaming platform that accelerated Spotify's ability to offer their new audiobook content. And finally was a combination purchase of Defensive Growth LLC and Chartable Holding LLC. Together, these 2 companies provide various data analysis of podcasts and the ads used within podcasts. This purchase gives them the ability to expand and scale their podcast monetization and product offering for advertisers and publishers. These acquisitions cost Spotify almost 300 million euros, but with it they gained almost 209 million euros worth of goodwill and 79 million euros of intangible assets. These are some hefty purchases, but how was their most recent audit? Well, in a word, not great. The audit immediately addressed a problem that made it difficult to check and double-check their revenue streams. The royalty system that they use to calculate creators' earnings is extremely complex and different for each individual creator. With almost 100 million different individual pieces of media, this issue becomes very big very quick. The auditor calculated the data to the best of their abilities given obviously very large constraints. Overall, the auditor recognizes what the following data shows. Things aren't great. Spotify continues to operate at a loss each year and keeps utilizing tax deferrals, but in the auditor's opinion, its future gains will not be enough to satisfy all of the tax deferrals that they keep using. Looking forward to the future, Spotify plans to continue on expanding their new audiobook division that was debuted in September of 2022. And like most companies, they strive to turn a profit. This is their biggest issue to date. But what about the hard data? Numbers don't lie, and they have a lot to say about Spotify. I used the 4th quarter year-end financial statements from December 2017 to 2021 to compile the following data. First is the price-earnings ratio using a basic EPS. And in this 5 years, it shows a steady negative income that from 2017 to 2020 hovered between about negative 15 and negative 225. But in 2021, this shot down to negative 1,176. Yikes. Next is the profit margin. With no surprise, it's been consistently negative. However, it has been trending upward, with the most recent one almost being 0%. Revenue has been consistently climbing, almost tripling from its 2017 number of $4,907 million to 2017's $11,003 million. Considering the profit margin, it's no surprise that Spotify has not turned a profit. In 2021, it came closest to breaking even with a negative profit of negative 38.7 million. Spotify's number of shares outstanding has continued to climb, reaching its all-time high in 2021 of 192.2 million outstanding shares. Across the year sample, Spotify has had a greater number of current assets than current liabilities in 3 out of the 5, reaching its greatest divide between the two in 2021. Its levered cash flow across these 5 years has been pretty all over the place. Really no real consistency from year to year. Working capital hit an all-time high in 2021 with $1,304.3 million after 2 consecutive years of negative working capital. All the data is good, but it only tells part of the story. How does Spotify compare to its competitors? Before Spotify can be compared to its competitors, we have to know who they are. Its 2 main competitors are Apple with Apple Music and Amazon with Amazon Music and Audible, neither of which are independent companies, but instead simply divisions of much larger corporations. Directly comparing these companies doesn't yield any real meaningful information because of the aforementioned size of Amazon and Apple. They're just too big to compare against Spotify. But that's where the common size comparison comes into play. When comparing Spotify and Apple through this lens, it becomes very apparent the trouble that Spotify is in. Apple's percentage of operating expenses and costs of revenue are drastically lower than Spotify, with significantly higher gross profit and net income. Repeating this comparison with Amazon shows similar results. Amazon may have higher total operating costs, but still has lower cost of revenue and higher gross profit and net income. What does this all mean? What does all this analysis really tell us about Spotify as a company? It becomes clear that Spotify has placed a big emphasis on growth and expansion over actually turning a profit. This can be seen with their consistent negative profit and big acquisitions year after year. Spotify has shown that they are banking on becoming too big to fail. Knowing all this, would I buy stock in Spotify? No, I would not. There has been negative return on investment. The price of their stock has continued to fall, and there is no end in sight to their negative profits. Spotify may lead the music streaming industry now, but the writing is on the wall. Without major changes to their business practices, they might be played off the stage a little sooner than they would like. Thank you for watching my video. Here's all my sources. I hope you enjoyed.